Welcome to another session of day reading. Today we have on the economic calendar one day before the CPI, and the time now is 10:30 New York time. So what we have here is Nasdaq on the left, and what is this? ES on the right. Yeah, just go. Give me a moment while I just confirm that I am actually live, right? So just give me a moment. Yep, I am. All right. So I'm on a 5-minute chart here, both on both. Yeah. So what? Let's see what has elapsed over. So from here we can see the week started here. Let's just mark it out. The weekly open is right here, right? Just call it WO. Okay. And I'll do that for ES, sorry, NQ as well. So what I haven't really looked at the charts until today. I don't usually look on Monday because Monday typically is a session of accumulation. So I want to catch moves like this. Yeah, like this. So I don't really want to participate in this accumulation phase. Hence, which is typical on Monday. So this is what some ICT traders also advise and recommend, like AM Trades. You can check him out on Twitter on the weekly profile. So Monday was a day of accumulation. Today we start off Tuesday, yeah. So we broke Monday's low here, and also Tuesday's high as well. Somewhat, sort of I think it was an equal high here. But let's check that out on the ES. ES also engineered an equal high over here. So let me just give it a green to have it a clearer distinction. So both engineered equal highs and both were taken out. No, so we have an SMT here. Alright, so SMT is smart money technique. Right, smart money technique. OCD me, changing it to a white font. So we can see here. Oh, wait, is it really an SMT? Sorry, it's not an SMT. I thought it was this high. Yeah, it's not. Yep. Wait, hold on. Yeah. Sorry, my eyes was not that good here. So yeah, it was as an SMT here because this high was taken out over here on the ES, but not taken out on the NQ, right? So meaning to say that at this point in time, you could have thought that NQ was forming a lower high, hence weaker, the weaker asset. But the time of day was 7, so we don't really expect movement. And there's no news today, so there's no 8:30 volatility driver. I'm just marking out the 9:30 open, right? So typically 9:30 opens the equities market open, so we expect some volatility injection over here. And from what I see right now, ES is looking very clean, right? Fair value gap here, institutional order, low entry drill, which is just a quick tap into the fair value gap, and we see it decline right now. Right, so if you didn't catch this, yeah, I don't think you are able to catch this. So price, I did the flip from one low to high, and as you can see, yeah, price is what I expect here is it will reach the -4 level, like here. I know it's quite obvious because right now you can see, oh, I mean, it's already reaching -4, right? So what are you talking about? So what I'm saying here is, once it reach -4, I expect a degree of retracement and expected here, right? So retracement or reversal and -4. Whoa. Let me see. This was Monday's high. Wow. Oh, actually, oh, that's actually hmm. What I was trying to say is that this was Monday's high, and I shall call it PDH, which just stands for previous day's high. So once a key liquidity is taken out, we can expect is a external range liquidity going to internal range. So internal range, we are looking at fair value gaps, right? So there's one here, but that's fully filled. All here's are just lows. Let's go on to a higher time frame. So from here we do see that there's an internal fair value gap here. It's probably lying around equilibrium. And this is actually very good because it's the internal fair value gap is around the -2 zone, which is what is expected for typical price movement. That price usually moves up to -2 to -2.5, and it will trace. So if there's further downside, I want to see it do this. All right, it should reach for a liquidity somewhere here within the silver bullet zone. This is discovered by Trader Dexter, right? And hit -4, right? Whereas ES very clean shot here, unlike the NQ, which this area of it's not very doesn't look very decisive, right? Yeah, as compared to here. So if you would have entered at the fair value gap here, you would have to weather some degree of drawdown up to 11.75 points. Okay, so that's me trying just munching some grapes. What I'm trying to draw here is trying to see the movement. All right, so we can see here if it does move. Sorry. Okay, right here. It's a 145 point moves already. But if we go it from the top, it's about 179. So 179 point move is still okay. We still can expect a further downside up to beyond 200. Yeah, I think about 250 is a sweet spot for NQ. Up 300 is a really very good. You managed to catch a 300 point move. That's fantastic. Yeah. And just a word of caution to say here is that all these red candles are really very enticing. It would really draw and induce your participation right here. Okay. Anyway, just wanna go through the one model here, which is the ICT YouTube 2022 model, right? So in this model, we see a key liquidity taken out, right here, and we expect that when that happens, there should be a form of reversal, right? So from buy side taken going to sell side, and you could have targeted this 1 hour fair value gap here, which is which would have yielded the 124 points, right? If you have entered at this fair value gap over here, this is the only 5-minute fair value gap. Anyway, yeah. So that's the model. Of course, you may have to demand a better entry with a discount and premium, meaning say from this high to this low, enter at the 0.5 premium level is some, which is any level above 0.5. So there's no PD array per se above the 0.5 except the consequent encroachment of this fair value gap over here. You could choose to enter right here, and you have been filled here. You can put a stop loss here, which is 35 points. For one contract, that's about $70, and you have 3.8 R. Yeah, very good move, right? 3.8 R. So if you had a runner going down here, expecting 216 points, that's a 6R right there. Right. So honestly, feeling a bit FOMO right now, looking at this move right here. I mean, of course, on hindsight, everything is clear, right? Wow, look at ES, totally breached the -4. So yeah, it's not really panning out as well to what I expected here. To expect a retracement or reversal at -4. Probably waiting for NQ, but I just don't want to make that excuse. Oh, I have an alert set here. Don't think really matters now. It's probably for last week's price action. So since price is already reaching -4, I don't think that it's going to retrace back to -1.5 anymore. What could still happen is that it still could go back here like this and go on further down. But I would not enter anymore because I think the move has happened already. You don't really want to catch any moves here. You want to be positioned, as in you want to be exiting positions rather than entering them. Okay. Okay. Looking at ES. The similar YouTube 2022 model, right, would be something like this. Premium, no premium, right? So you wouldn't have been filled. You have been filled on NQ but not on ES, right? Because if you demand a better entry, you would have placed your entry here at this bearish order block, but yeah, the move happened without you. So that's not a good feeling, but still doesn't matter because the markets are here every day. Don't feel like you're missing out move, okay? Because it's just Tuesday. There's still 3 days of the week, and it's here forever. Even if you die, it's still here, right? Okay, right now we see a retracement candle. Let's see for ES if it has taken out any liquidity. It has not. It has hit a order block over here. 1 minute order block. I coat my order block with a green color. I don't think it really means anything. It's just a resistance that it has found here. So when it hits here, it will just retrace. For NQ, what are we seeing? Nothing. There's nothing here on the 15-minute per se. 1 hour, not really. 4 hour. There's a gap right here for the 4 hour. So this is the MMXM model. External to internal. Alright. Wait for 15-minute market structure shift, which happened here, and you check if there's an SMT. So the market structure shift happened with this candle closure, this one, this displacement candle here. It broke the lows here, it broke the swing low, and there your only entry is right here. But for ES, yeah, the SMT also occurred here, right? Oh, sorry, there's no SMT. I'm mistaken. I thought it was an SMT, but no. Well, but doesn't matter. So back to the 5-minute again. Okay, price still continues to go lower. So that would mean that this price swing might not have been anchored properly. So let's go to the 15-minute and see where would we have anchored the Fibonacci retracement. So, hey, where did it go? Sorry. Yep. Okay, it's not panning out. So what I think it's doing is it's going more towards the -4 now. Okay, let's just observe what does he want to do. I'm expecting a retracement, okay, because price has reached -4. Now it's a pair of macro, which is a 1050 to 1110. Okay, during a macro period, it's what ICT say. This the algorithm runs on a set of instructions to seek liquidity. So at this point, what are the liquidities there? There's this for our all fair value gap. Yes, there is. And I mean, what else? I don't think it has. I mean, it's already touched this liquidity, so I don't think we want to go there anymore. So I'm thinking upside back to D minus 1.5 region, right? So if we would to draw the discount and premium levels again from here, this fair value gap right here is in the premium region. Okay, so I'm just thinking it's going there now in the next 20 minutes, 10 minutes, 20 minutes. Many fair value gaps here on yes. Don't mind me, I'm just munching some refreshing grapes. Just also one thing I want to point out is that there's some beauty and skill associated with your eyes acquiring that experience to see how the candles paint life, right? I mean, like you look at this candle, it was green and now it's red. Okay, so this is what sometimes may trick you. You thought I would think it's a retracement, right? But now it's red, so apparently it's not. But we still have 2 more minutes to go, so we don't know whether it's a real red candle or not. But I'm starting to see an SMT here. Oh, well, okay. Let's just wait for this candle to finish painting. In the meantime, I just want to see if we could have predicted the reversal here, right? So what I'm gonna do is I'm anchoring my Fibonacci tracement. It's not. Yeah. Yeah. I'm just thinking. I don't usually not very good with as in I don't think this standard deviation tool can accurately predict aggressive legs. Okay, I struggle with this because I technically by definition you should anchor it from a high to a low, so you would expect price to reach here, but then it didn't, right? So what is inappropriate then? If it's just these two candles, yeah, okay, yeah, but how do we know whether it's two or whether it's three? So that's the one of the confusing things about standard deviations, is that you sometimes you do not know where to anchor. Like you can see here, if I anchor at the high and the low for ES and I expected it to retrace and reverse here at -4, but it didn't. Right, today is just a classic sell day, okay? Accumulation during Asian session. Sorry, this is Monday's correct. So accumulation. Where's my Tuesdays? Hey, yeah, this is my Tuesdays open. This is not my weekly open. Sorry about that. My weekly open is here. My weekly open. That was my daily open, sorry. I thought Monday was Sunday. Anyway, I just removed this for now. So what I'm trying to say is accumulation, manipulation, and distribution, right? Macro. Don't want to obscure the price action. Yeah, manipulation. Let's see, for NQ as well. If I do this, yep, it did hit the -2 zone before it declined, right? But it's just 2 candles, probably 3. But yeah, I mean, let's go down to the lower time frame. I mean, how do you know, right? I could do this on a 2-minute and hit -4 and reverse. Yeah. Well, just remove now as it's not very clear. Okay, cleaning up some of the charts. Okay, so let's see, where are we now? Okay, 5 minutes past 10:50. We're still in the macro. So let's see liquidity, man. Let's go retracement into the equilibrium of the range that it just created, which is right here. So I think it might go back to here. It would be kind of sucky if you are in a trade right now and you expect this low to be taken, right? I mean, let's just put here some contact and some sell side here, liquid sell stops here. Look at that candle, very bold candle, looking up, breaking market structure. And is there an SMT? There is none. I just say I'm thinking you go here. Alright, that's my prediction into the premium fair value. Oh, I actually think I'd like to reduce my dealing range, right, from this high to this low. Alright, because I don't think it'll go back so high anymore. So yep, the premium fair value gap will be this one right here. So I want it to go up here and go back down for the sell side again. Gonna adjust the dealing range accordingly. So nothing much changed by NQ. There's only one. I mean, there's another fair value gap here, but it's just shy of the discount. So oh, sorry, that's because my still within the discount zone. So this one, So red candle, yeah, but I still think it's going up. So probably on a lower time frame, we already have a YouTube forming. Okay, so internal liquidity taken, displacement up, right? Almost formation of a YouTube model. You would take a long here with a stop loss of 25 points and targeting that's about 4R. Okay, I'm back. I'm not sure why. Why does it kind of like idle out and just disconnect my audio? I'm not sure where I left off. What did I not say? I I was saying that a YouTube 2022 model could form right here if it's an entry at this order block. Believe that's already in discount region going up. Yep. If you're a beginner, you might just want to go for 5 handles. Okay, so there's a fair value gap here now. 5 handles. Where's 5 handles? Oh man, 5 handles such a low threshold. But still money, you know. Wow, oh man, 500 is like right at this high over here. I mean like, why not just go for 13 now? The lowest hanging fruit could be just here. The mic is actually picking up me eating grapes. Okay, let's delete this. No longer relevant. Well, if I'm not talking, it's not like I have a lot of things to say, okay? I'm just waiting for the candles to paint. Looking green on both right now. For ES we did tap into that fab, okay, but NQ didn't. So that's an institutional order flow entry drill for ES if it does. Go upwards. Another minute. Something random, but I just found I could just restart my audio by reinserting the 3.5 mm jack. Okay, here we go. NQ already popping up, taking out its previous candles high. I might actually go long here, but it's more of an aggressive formal move if you wanna enter at this. Mm, sorry, this little order block here. Right. So considering if I had entered and my 2R would be here and the silver bullet zone, but I don't know, I don't really feel like it could take. Let's see if this pans out for 67.75 handles. We have 4 minutes left in the macro. I don't expect a full fill of this fair value gap, okay? Because ES has taken but NQ didn't, so NQ is the stronger long now, as you can see. There we go, bursting upwards. And as its counter trend, I'll be comfortable with just a 67.75 handles. I mean, I'm not asking for much. Because for all you know, you might be wrong. So, right. It's looking promising. So, I am feeling confident that you will hit here. If I have taken this trade here, it's a 1.6 R trade. This gap remains open. What's the word for it? Will not be fully filled. Okay, I'll take away this premium fair value gap. It's like just to clean out the charts. Because what is relevant now is here. Here, hold on. This one. Alright, so this was a 1 hour fair value gap, right? That's very interesting. So okay, what we could potentially see here is that price is going to use this 1 hour fair value gap as a step, what they call a trampoline, jumping board, right? To bounce off. This will act as a support and it will propel price upwards, okay? Let's see if it offers that support. So far it hasn't tapped onto it, there's no wick on this candle. Excuse me. If you were to strictly follow the YouTube 2022 model, right, you will not have failed. And you must be contented with that, alright? You must be both, there's a pun right here. You must be both contented that you do not always get to be filled, right? And you need to battle that. You need to contend with those emotions that you will not be filled. Because otherwise you'll be chasing price, right? Imagine feeling in premium level and then price retracing back to the fair value gap again. It's just it makes you very messed up as you know deal with this mixture of emotions, right? The regret and guilt that you didn't follow the model. So we see now price already fully feeling this 1 hour fair value gap, right? With a week out of it, we have taken an entry here too inside this fair value gap. But where would your stop be? You might want to put in this fair value gap thinking that it might not be fully filled, right? But may I suggest to you that this is my favorite draw on liquidity, right? Two equal lows above a fair value gap or in proximity of one. It just feels like it's a really good magnet, right? Just like there's an imbalance here the price wants to fill, and then it's just waiting to just take out the trails. The stop losses that are being trailed right here. Okay. This just be inducing people to go for longs, which like me, I would have already contemplated a position here. But it's all there's no I'm not logged into any trading account. Okay, so this is just pure paper trading. I'm logging into trading account, right? So this didn't really pan out, right? This 1 hour fair value gap did not off act as support, and it's back to my entry level. This candle, so now this is the order block, and we see a reaction of the order block right here, or what it seems like it, right? See, all being supported by this order block. What happens if we have taken this? Just trying to gauge the risk to reward if I can get a 2R. Yeah, it's 2R somewhere here. Yeah, somewhere in the fair value gap. Okay, the macro is over. We don't see anything per se. We're supposed to see take liquidity. Did it? On the 5 minute, it doesn't look like it. How does it look like a 15? Wow, this looks like very cluttered, huh? I'm gonna remove more things. What's this? I don't clutter my charts. I was still looking. So this is a 3 minutes fair value gap. Better label it correct. Or was it a 5 minute one? Oh, it is both. Oh, it's not. Sorry, it's just a 3 minute. M3 fair value gap. Okay, going long. 1.67 we are waiting for me. So one more chance again, right? To use this our 1 hour fair value gap, right, as a stepping board, jumping board. Okay. So what we are seeing here is this actually looks very clean. Yeah. All these are hypothetical positions. Yeah. I just gonna do some Fibonacci retracement. Yeah, aggressive move down. Not very sure where to anchor them, but let me just try. Okay, I'm thinking it might be here. Wow, back to this fair value gap, huh? And where would that be on the? It will be a 1 hour fair value gap. Sorry, should be looking at 3 minutes. I don't know how true it is. I'm not very confident on this anchoring at this high here to this low and expecting that price will reach here. Okay. My first objective is that and this silver bullet zone, I want to see a reaction. Okay, I want to see if there's an reversal right here in this region, and I want to see it go down again. Um, yeah. Just want to expound a little bit more on the YouTube 2022 model, right? Yes, you, like I say, you've been contenting yourself with the emotions of not being filled, but that model's not always gonna pan out in your favor. So as you get more and more experience, right, in reading the charts, I really recommend live trading. Just don't place any trade, just watch how it paints, okay? Because when you pay, you you place a trade, you're engaging in different dynamics here. Because what you're doing is you're triggering your mind gets engaged to deal with the emotions of trade management, right? So you may deal with adrenaline or cortisol or dopamine for that matter, right? And that may affect your focus on your bias, right? You may not be as clear here, but what we really want to do here is that look at how these candles paint and learn. Okay, see how they form, how they end, where do they end up, where do the bodies end up, where do the wicks touch, and where is it likely to go. Okay, so you might not get feel, and what I wanted to describe was that I took an entry here, right, at this order block, because I saw that ES there was a really just a quick dip into institutional order flow entry view, and NQ didn't. So that gave me an indication that if both NQ and ES are symmetrical, they should go long. So that's why I took this. And what I'm trying to tell you here is that be on the same side as the order flow, right? You do not need to always be fixed to a model. You can, but um, it's just like bicycles with training wheels. To start off with, you need training wheels, right? To make sure you don't fall. But as you get more and more advanced, you know how to navigate the curves of the road using the bicycle without training wheels. And you know that, okay, with this speed, I'm able to make a turn. Yeah, and I will not crash. And that's when you apply all this order flow knowledge right here into this, as well as risk management. So with here, with a 40-point stop, I will only go for one contract, one micro contract. Yeah, I wouldn't risk it. I mean, that's already $80, right? I mean, I'm just trying to get like $130. Okay, so sorry, entry here, right? Feels like a bit fake, right? Now that I've said it. Yeah, so I as I was saying, I expected this R1 fair value gap right here. It's gonna change its color a bit to act as a jumping board for it for price to be propelled higher. And my stop would be somewhere here, which is below the consequent encroachment of this 3-minute fair value gap, right? Okay, the candle ended with just 1 wick touching, so seems to suggest that it's obeying, is treating this fair value gap at an inversion level. But the next candle doesn't really respect it, so I'm in drawdown right now. 7 points, drawdown, and looks like it rejected. Boom, 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 boom. Well, it's also 3-minute fair value gap right here, right? You could enter on this 3-minute fair value gap too, but I'll be a little bit cautious now. I mean, I see the terminus here. It could be here. It could be this fair value gap here. I'm just a little bit yeah, cautious because it was downtrend, so I'm not too in favor of longs. Just that well, I predicted you'd be long here, right? So let's just see how this trade pans out. For ES, did the wick touch the order block? Let me just check. It looks like it did. The low is at 5225. Yeah. Oh yeah, it did. So yeah, barely touch it really. If you put your entry here in this order block, you might have been filled. Yes, going green already. NQ not yet. And here we go for ES. Boom, 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 boom. Just a small green candle. So at this point of time, this small green candle kind of like makes me think twice. Right? I I don't really feel that as confident now. Something tells me that it may start to reverse from here onwards. But gun to my head, I'm still bullish. I'm still wanna see this fair value get tapped, and a reaction right here in the silver bullet zone to take out the current low of the day. Oh, look. What's happening? Yeah, my gut feeling seems to be pen. Not really expecting and not really liking this wick candle here. Because there's no wick. And also it's because of this green candle here. I really wanted it to leave this fair value gap. The hour, first hour. Yep. Okay. So if this is not correct, right, we will start to manage our positions, okay? So ES now getting few on this order block for real, and NQ testing the order block right now. So what I really like to see, if we are long, right, I want to see it go up now. I don't want it to spend any more time dwelling right here anymore. Because if it does, it's just gonna show that it's it's bearish. Okay, green, looking good. So long. So what we would like to see here at a very micro level is that it starts to breach beyond halfway point of this wick candle. Okay, because halfway I will feel more confident that a long is still on the table. Yeah, but it's just starting to dwell in the lower half of the red candle. I would think then it's going for a short. Okay, so this is what I just mentioned, right? You want to see it exceed the halfway of this candle. Okay, it means that yeah, this we continue to expect bullishness. Which might not seem like it now, but I'm still confident that it's going to be bullish. Okay, just wait for it. Wait for it. Wait. This order block is holding price as of now. You will not feel comfortable, okay? Because I mean, you're in this position here, or maybe you're like in this aggressive position here, and now you draw down. That's doesn't feel good. That's why you need to practice good risk management and trade management, right? If you start to feel the bullish PD arrays, then what do? Okay, you start to make plans. At what certain level do you just say, right, that's it, that's enough, I'm gonna exit, I'm not comfortable with my TCs no longer panning out, right? It's time to call it a day. So it ended up with a red candle, but the candle body kind of still closing within the order block, and the next candle we should tell whether it is bullish or not. It just did tap this my original entry again now. So let's just measure what was the maximum distance it went, about 33.25. That's about halfway, but well, didn't really make it to 67.75. So this 1 hour fair value didn't really, it was confusing actually. It didn't really show any signs of it being a value to live tape reading. I expected it to bounce up, but it didn't. It didn't seek it to bounce downwards either, or at least not yet. So, I'm just gonna hover over this level here. I just want to eyeball this level, making sure that I don't want price to go below this point. Because if it does, it's really going for this fair value gap. Because like what I say, this favor draw liquidity. Oh, here you go. It's going for this one right here. I am no longer confident of a long. I don't like to see it stoop so low here. Yeah, not really desirable. Okay, candle ended with like a very long wick, suggesting bullishness. So, yeah, you kind of really need to weather through all this unwanted price action, if you will. Right, so on the 5 minute we have 3 red candles, which could probably suggest a formation of a bullish order block, right? If so, then well, it's gonna go quite far. Okay, so he has breached the first level, confirming a bullish order flow. So I want it to start seeking the second red candle, which he has exceeded half his body. So it's going to reach for this high and reach for the 67.5. How long did I have to weather this? Was it a entry here? So how long? Wait, imagine I entered here 11:06, and now it's about 30 minutes already. Okay, here we go. Yeah, so your mood should be better by now, seeing that it's panning out in your favor if it's a long. Or at least by the looks of it. On the 5 minute chart, and the time now is 11:39, going to 11:40. Look at what's happening right now. So, yeah, might not be really advisable to participate in the price action right here, because it was a downtrend move, and if you adopt the strategy of the trend is your friend, you should look for shorts, right? And here you're playing long, so don't risk it too much. if you are kind of counter trend. Especially so if you're a beginner, though it might be tempting to play counter trend just because you happen to be here at the right at the charts at this time and you do not have an entry for short. Doesn't mean that you should take a long. Alright. This is slow and doesn't look good. You can see here the price tapping into this hour back. Just want to confirm again, is it really? Yeah, it is right. Oh, it's not that accurate. Let's go, come on. You sense my frustration. Yeah, like yeah, you want it to go where you want it to go, and that's normal. Okay, we're humans here. Especially when you're in a position you're definitely bias locked. You want it to go where you want it to go. Right? I hold no positions right now. Here are my would-be positions. Right? What I want to see, what I want to see for this candle is to exceed this wick here. Whether is it a candle body's closure or wick passing, I want to see price hit pass to continue the narrative of a bullish short-term bullishness. Okay, we can see here this one is the low. This one is the low form. Okay, here we go. Um, so according to the market maker buying model, right? Oh, this low here could be the low risk buy. If it is, it means there's two more legs, and that means it's bullish. Okay, here we go. So both positions that I have are currently in positive now. 13 points, 14 points. As you can see, the stop is wasn't what's the word? Wasn't threatened too much, but yeah, it's not doesn't feel good, right? So that's the point. You need to be acquainted, be familiar with this feeling of drawdown. You're not gonna escape it. You're gonna have drawdown, right? So it's about how you know, desensitize or acclimatize, familiarize your emotions when you go through a drawdown. You will panic. What should I do? Should I close my trade now or should I not? Or should I hold fast to my bias? Right? So what makes you hold fast to your bias? Discipline or otherwise experience to know where price is going. Experience means time in the charts. You need to backtest, see static candles, as well as live tape read to see live candles painting. Okay, so this is a win-win situation for both you and me. You're looking at this right now. You are gaining experience, okay, on how the candles paint. You could see that in the past, at 10 minutes at 11:30, I was starting to have wavering doubts, right? On the 3-minute time frame that I don't like to see this candle here. I definitely didn't like to see this, but now it's a point of reversal, so okay, fine. But um, it's natural. Okay, I was just being honest and sharing my thoughts. How would one feel if you're in long position right now? What are the things that you go through? So don't think that it's not natural. But for me, I didn't move my stop. Okay, I still want it to be here. I think it's a good place to have a stop because it's at the end of the fair value gap. It's beyond the middle, which is the consequent encroachment of the fair value gap. So I do have many levels before I feel that my bias is wrong. So if I did enter here on this fair this on block right here, right? One price past this on block, that's one field PD array. And then if it taps into this fair value gap, it's showing signs. I want to see it could have taken out this two equal lows here before reversing. If it does, good. If it doesn't, that means the second PD array is being threatened and failed. The last PD array that I want to see fail is this one, right? So if the candle body does not does close above this line, that means any level around my crosshair, I would think there's still a bullish chance for bullish narrative. If it doesn't, if it goes end up here, I hope I need time to just close the position early because I would think I'm wrong already. Alright, so this stop loss gives me enough room here for me to react for trade management purposes. Alright. Very good. We have a 1 hour trade here and a 1.67 hour trade here. And whereas on ES I have already gotten my 2 hour. Oh, have I? Oh, not yet. Almost. I'm finishing off my last grape now. So just a reminder again, I want to see some reaction at this level, right? We are approaching the the next hour's macro. So this panned out well. It was not fully filled. And yes, boom, 2 hour. Thank you anytime soon. If I had a runner, I might actually put my final level of TP right here at the wick of this, because this is a breaker, bearish breaker. So if it could touch and go down, there's a chance. Because what was not really lining up is I'm not really sure about the standard deviation projections right here. Okay, this is just a lowest hanging fruit. And I think that price usually reaches -2 levels before reversal. Okay, that might pick that sound up. It was me scraping against my goatee. I'm scratching my hands down, but the mic doesn't seem to have picked that up. Weird. Okay, never mind. That was just something random. Yeah, we'll continue to look at price right now. Looking bullish. As per my initial thesis when I was around the charts about from 1050 onwards, yeah, I say I expected a retracement. Okay, let's go. We just have a little more go to reach. It's funny that I'm saying that although I hold no positions here. Yeah, I'll take this off for ES because yep, position is close for 2R. So bag it and go home, okay? How much? What is that actually? 15 handles. With a $735 stop loss. How much is that? About $70. Man, I'm not so good at math, am I? Yeah, $77. Wow, that's not bad. So we see a new fair value gap form here. So just want to touch on the market structure for market maker models. There are typically three legs, right? So we have let me just illustrate with some lines. So 1, 2, 3, right? So this is the low risk buy, and this is the first leg of accumulation, and then the second leg of accumulation. So this second leg of accumulation is the most aggressive. It's like really fast, so you want to catch this. This one sometimes might be hard to catch because maybe here another low will be created. Yeah, it might be this. So then if you are entered here, your stop better be able to withstand a potential of this forming. Yeah. So this one I feel is the first leg. I feel the low risk probably occurred somewhere here, at the lower time frame. So I'm not thinking that this is the low risk buy. Yeah, because I don't expect a large run, just a small retracement run. That's it. So if this is the first leg, then there could be a silver bullet that forms, and that silver bullet is gonna be fast. Okay, we see this thing happening again for ES. See, ES tapped into the fair value gap, but NQ didn't. NQ is the stronger long now. my audio again. I lost it. I hope I um shared what I was sharing. This is the market maker model that I was sharing, right? Yeah. So this is the low risk market structure where the orders are being filled here in discount area and will be offset here. Then this one could be the first leg accumulation. So it could either be here or it could also form a lower low here. So my experience with the first leg is sometimes I get stopped out by this. I thought that it will not be stopped anymore, but it did. Okay, so this yellow line here is maybe some potential scenarios, and the last dip here is the buy the dip. So it's already called buy the dip. The silver bullet, the most aggressive move, right? So if you enter anywhere before silver bullet, good for you because it's going places, right? For me right now, I'm just waiting for this level to hit. That's it. That's the first milestone before I expect reaction. I want to see a reaction, okay, at the -2. So price is at equilibrium now between this daily range, right? So this hour fair value didn't really work out at all. I feel like saying I'm gonna remove it, but I feel like when I do, then it happens. Let's see. Well, I was saying 3 big candles form an hour block, right? So this is an hour block now. Not sure if I mentioned, yeah, it's 1 day before the CPI, so I won't go full port or anything crazy. It's never in my character to do so. Okay, yeah, so be cautious because actually for today I expect a day of consolidation. That's because tomorrow the news is very crucial for the world, right? Every economist is kind of looking at it to see if the Fed is going to increase or leave the rates unchanged, or reduce the rates, right? So imagine the big market players, if they're managing big funds, what would they do? Would they actually participate? Think about it, right? Why would they incur risk on a day that is not so probable? Why would they want to upset and cause a potential mistrust of management of their funds? They are entrusted fund by investors, right? So they jolly well, manage it impeccably. As now you can see that I'm not talking about any bearish narrative already, right? Because I'm kind of cleared the woods here. The woods was these 3 candles here, and being on a 3-minute chart of this, alright, it wasn't any fun at all, right? So we are cleared, and Just observe your emotions. As even as I speak, I feel better. Right? Oh, we're almost there. Come on, let's get it. Yeah, observe your emotions. Journal it down. How you felt during the trade. Like during this period from 11:20 to 11:30, I was being challenged because I saw the candles pin not in my favor, and I felt like I was losing confidence in my bias. You could all write this down, but I held steadfast to my initial bias, which is I favored along after expecting a retracement as price hit -4. More so for ES, but as both markets are symmetrical today, I would expect the same for NQ. Hence, at this point, I am long after I saw this candle confirming a long direction. You could also write, I thought I would expect a YouTube from it to form right here, but it did not retrace back to discount region for an entry. Hence, I was not filled. But seeing how price continued to move on without again away from my entry, I took another entry here or anywhere within this region, and my stop was being challenged in this region. Yeah, even so for now, look at this. This is, I mean, like, we're almost there. Come on, man. It's red now. That's not good. Okay, and it's like 2 more minutes. There are instances where price does hit -4 and retrace back to the -1.5 again, and then it continues further back to -4. I don't think that's typical. Yeah, it's 12 p.m. so that means it's lunchtime. Yeah, we're already in the next macro, right? So yeah, totally forgot about this macro. So we expect the macro to happen during this period of time, which we thought that this was the candle showing a very large greenness, but then yeah, nothing happened as of yet. I think I would take my leave after this 1.67R is established. Yeah, I mean it's completed. This is a scalping move. Sorry, I'm a bit quiet. A bit tired as I've been here for 1 hour talking, going through the thoughts in my brain. Yeah. Look at ES. Consequent encroachment. Candle bodies did not pass. Interesting. which is not a good sign though. It means that it's ready to go back to a short. That's what it's saying. And then you just gotta be very patient, right? You might be tempted to, if you saw this candle which was so green and almost hitting your, if you were trailing, you might want to just exit here, but you see, you might eventually just touch this fair value gap, I think in this next candle we should see my profit levels taken. Yes, hitting an order block is it. Looks like it's going low now. 2 more minutes. Do you find it fun to take weight? I don't think it is. It's not fun. But you can see it as fun. I mean, it's all about your mind and how you look at things, right? It could be fun because you are thinking the correct direction, and you are. It's kind of like a little win and a little dopamine hit for you if you manage to predict the right direction and not get stopped, right? So yeah, I may have trailed my stop to a more conservative level, right? Since it's way past my entry now. So this area here, this one could be a good place to stop, right? So I'm shifting my stop now. Of course, yeah, when you shift your stop, your RR changes. So yeah, I was saying that you could treat it as a game, some fun. I mean, don't have to take all things in seriousness, right? I just want to quote a quote from Albert Einstein: "The highest form of research is play. The highest form of research is play." Let me just yeah, because when you play, your mood changes. Your mood shifts to a positive one, right? And with positive mood, you are able to, you know, assimilate, absorb things better. You are more in a creative mood to do so, rather than in a stress zone that your body is kind of geared towards fight or flight. Yeah, so you can treat this session or any future live tape reading session as play, right? So like how I titled the the title of the video live stream here today is called Tape Read R's. Kind of like a pun. I love puns. Pun on Toys R Us. So Tape Read R's because R's stands for US futures for ES and NQ. Yeah, which is what we're doing here, right? So ES is accumulating in this 5 minutes fair value, whereas NQ is leaving it. An hour already, and I still have not reached my profit target. I'm almost there, but I'm not. Haha. It's going there, it is. It's going there, it's for sure. Come on. Boom. You just need to move in one candle. But it's just showing accumulation behavior right here. Probably drawing synchronicity from ES accumulating orders in the fair value gap. This has to be my longest live stream for 1 hour. Here we go. Here we go. One is 49.50 handles and one is 67.75 handles, right? Are we there yet? We're almost there. And we're not. Okay, yeah, I think I'll sign off after this. I hope you and there we go. Hope you enjoyed this time together with me. Thank you for joining me here in the session of play. Tape read RS for tape reading NQ and US futures 1 day before CPI. Alright, thank you for watching and catch you on next time. Hope you learned something today, right? Okay, I shared some good psychology and mindset things, and as well as order flow signatures as well in this.